Hey, good morning, guys. This is my morning video. It's about 5 a.m. Really early. The markets are really not open yet. Basically, we had industrial production numbers come out of Germany this morning, and they were pretty dismal. Okay, so I am getting a delayed feed from Germany right now, but getting a little bit of selling pressure in the European indices this morning. And one place you can always look at it's Bloomberg futures early in the morning, and that can give you these aren't real time, but they update about every 15 minutes. Okay, so keep that in mind if you want to get just a real quick view early in the morning. Bloomberg is one of the best sources for that, so I thought I'd help you out with that. But U.S. futures are um, not looking the hottest here today. Let's see here. I'm load it off my screen here on my thing. See if I can short that off a little bit here. There you go. There you go. And basically, you're seeing a little bit of responsive selling at these record highs in the market this morning. So just keep that on your watch going forward here, the situation going on. I started with an ETF watch on my scans, early morning scans. The Qs are catching the brunt of the pre-market volume so far, outpacing the SPY by just a tad. It looks like a light trading day is setting up ahead. But like I said, it is 5 o'clock. The real volume doesn't start showing up to around 7 o'clock. So, but yeah, looks like we're going to have a lighter trading day volume ahead. But like I said, it is still early. Quick rundown of what's trading this morning a little bit. You got a little bit of action in forward in the S&Ps. That seems to be the most active. Apple is up there, quite active. There's a big difference between $8 a share of stock and having a lot of volume, and $325 a share of stock and having a lot of volume. So Apple is really the one that's out leading here, but by dollars and cents. So Gilead's active again. Advanced AMD is active, and Boeing's finally showing up here, showing up to the charge. Looks like they are trimming some of that off. I do have a very small position in Boeing this morning. Looks like they're taking some of the froth out of the Boeing. We had that big run up yesterday afternoon. They were reporting that come next week that the FAA is going to be coming out talking Boeing and potentially given a timeline for the MAX going back for service. So maybe as little as a month from now, they're going to start allowing the MAX back in flying. So very bullish scenario for Boeing, and that will likely take the markets even higher if that case happens. So just keep that on watch here. But so far this morning, they're trimming some of the fat on the S&P 500. Okay, the NASDAQ 100. Apple, of course, Gilead. Tesla's showing up on that one. They are trimming fat. Look at this. So yeah, that's almost a $20 drop here, or wait, $12 drop, basically. 48, 30, yeah, about $20 drop, yeah. Roughly a $20 drop in Tesla so far this morning. So just keep that one on watch. It looks like it's getting pretty darn active here. I do think we've got, there's a gap below, and I think we're going to be going down and tagging the gap today on Tesla. It's right in striking distance. So the markets do seem to be on a sell signal. So keep that in mind on Tesla. And Microsoft, of course, is pretty active. So some of the things that's really going on here, Microsoft's actually holding in there pretty good relative to some of the sell-off pressure we're having right here. Okay, the Qs has the most volume, so I'll start there. You see this accelerated uptrend on the Qs. We're right here, completely wedged out between my resistance, significant resistance, and that pattern going into today's session. And it's really important to note this was the expected move for the week. And we are in a very tight wedge pattern for possible breakout or breakdown on the Qs, and we're seeing that selling pressure in the markets. So very strong possibility we're going to see responses selling today's session because of our relatives or how far we have gone this week, some profit taking in these markets. So keep that on watch here. Basically, we closed at 2 standard deviations, or yesterday's open was 2 standard deviations away from the expected move for the week on the Qs. And we're right there in that real tight wedge. And if you go down on your 1 hour charting, I have to change my time period here so it'll match up right. Give me 1 second here. And 90 days. You see this accelerated uptrend? We are coming right off that trend line, coming right back down to that primary trend line here on the Qs. So just keep that in mind. This looks like we are potentially breaking away from this uptrend line again. And once we do that, we tend to get higher volatility. So there is a lot of risk to the downside setting up here in the pre-market session. We'll see what happens and stuff, but we are extremely overbought for the week. So just keep that in mind going forward here in your trading. Now the Qs are a little bit different, or the S&Ps are a little bit different. I'm just going to stay on the 1 hour here. My market maker move study, try to ignore that. That only works on the daily time frame. But I didn't want to take it off here. But at any rate, I've got a fib extensions based off of what the market maker move was. We're less than the 2 standard deviation so far this morning, into some significant resistance. I've had drone for months now on the S&Ps, and we are coming off that along with the rest of the market. But keep in mind this primary uptrend, we just came up yesterday, or Wednesday, and we back tested that Wednesday. And then we came off of it a little bit yesterday, and now we're drifting away from it, and we just broke that 50 SMA on the 1 hour chart here. So that is actually showing some relative weakness going forward. And we already know, we already came in this week with expanded volatility on our S&Ps, and we blew past that. So just keep that in mind, that scenario going forward here. This thing can start seeing some responsive selling for sure, and pick up some steam here. Because once you break that trend line, if you notice the volatility starts picking up, see how that volatility, once we get below that line, starts, it starts spiking a little bit, especially right here. And if we're going to start drifting away from that, then I would expect higher volatility to set in the market today. Okay, we back tested this primary accelerated uptrend again on this one as well, on the Russell IWM, coming right into that 1 hour 50 SMA. As of we're speaking right here, we're trying to cross below that. We are trying to cross below the 2020 open as well. So that's another one with potential higher volatility going forward. And keep in mind on your fib zones also with this one here, that's a fast move zone on your fib zones. So back testing this white trend line is very likely today on the IWM. Extremely likely that scenario is going to happen. And so we're 2 standard deviation move on the Russell. Okay. And the news is out that Russia's pushing back. They do not want to cut production levels. So that is a bearish scenario for crude going forward here. And then we had, that horrible number out of the Russia, okay, or out of Germany, the industrial production numbers. And we're going into non-farm payroll numbers that are expected to even be higher than December's. Well, I want you to ratchet down your expectations, because these are the January numbers. and we have all of our seasonal workers for Christmas, they actually get laid off. So any type of or labor increases are going to be from the industrial side for the first of the year. And I know for a fact we're in the auto industry. Starting this week, they are actually laying off the temporary workers because of the China supply chain issue with this whole virus thing. So I don't know if it's all going to factor in yet, but as far as a lot of job creation in the industrial sector for January, you might want to wane back on that a little bit because they're already starting to lay off temporaries in the industrial sector due to supply issues, and they're going to start having to cut production schedules to manage and maybe eventually have to shut down plants. Like Hyundai's already shut down in Korea. They can't even produce cars because they can't get the parts out of China, and we're going to see we're going to hear more of that if as this lingers on, because even if they start things back up next week in China for production wise, how many of those people are going to be homesick? Because anybody even remotely with a fever or anything like that, they're not going to be allowed to work. So, and this is a very broad flu scenario in China. So keep that in mind going forward here that the non-farm payrolls I'm leaning to think are going to miss expectations. Take two got hammered in the after-hour session, so keep that in mind. The video gaming, I think so many people are just actually working and stuff, and it was a shortened Christmas season. People really weren't going out buying and spending time gaming. This holiday season, and so far we've had two gamers report, and both of them have missed on their numbers. So keep in mind, it seems like the gaming sector of the markets was under pressure this holiday season. Okay, what's going on with Tesla here? And this is the scenario that I'm looking for here. This primary uptrend, we came back up, found some responsive buying yesterday, and we're back testing it and potentially breaking it as we speak. We're just right there hovering on the line, okay? And we broke it yesterday morning. So I'm thinking we are going to break that again, and ultimately we are coming down to the 665 area to fill this gap. This is my scenario. This was a significant topping pattern for overblown top for Tesla, but this is our primary trend down here. So I'm thinking we are going to be coming right back in and testing that gap either today or the first of next week. So just keep that in mind. I'm not overly bearish Tesla, but that's the way the patterns are playing out here, it seems like to me. Going forward today, we do have an untested VPOC at the 346 area. We can very easily, if these markets are just stabilized here, we could very easily hit that today on the open. So this is a target that I'm looking for in today's session, and that's why I do have a long position. I took a long position overnight for that scenario. But so just keep that in mind, and we do have another untested monthly VPOC way up here at the 370 area if the narrative does improve today on any type of news on the recertification of the max. I don't really know how big the selling pressure is going to be in today's session. One thing I do want to point out, right up here is a weekly untested or a daily untested VPOC, Virgin Point of Control for Apple, which I thought we were going to tag today. Then we saw didn't roll over. So we got a wedging pattern going on our Apple here, and we are coming on the 30-minute here. We are coming right to our 50 SMA on our 30-minute time frame. So if the markets were to catch a responsive bid, I still think that Apple's wanting to backtest this virgin point virgin point of control that has not been tested yet going forward. I just don't know if today we are going to have any type of strength whatsoever for that. That might have to happen Monday for that scenario. Okay, I have a significant trend resistance above. We had found some responsive selling down here, and buyers were cut off at the 183 area. But my technical analysis shows that it's the 185 area that's actually more significant resistance on Microsoft. So just keep that in mind going forward. That while we've found some selling pressure here in the past, I think Microsoft's got a little bit more to the upside if my charting is accurate. Gilead post earnings here. It is trading up here near the highs of the range, and it's sort of been channeling for a very long time here. So if we are going to start seeing some responsive selling, I mean, it is very active this morning, but it looks like this might be a topping situation for the Gilead. Don't want to get too bearish yet. We broke down and back testing now on our bonds. We are just now crossing back testing this trend line on our bonds. This is typically a bearish pattern back test scenario, bear flag continuation pattern to the downside. That would be supportive to the market's pricing today. So just keep that in mind. The bonds do have a slight bid, but just it is an ever so slight bid so far this morning. And our VX futures here, we are hitting at yesterday's highs on our volatility futures, and we crossed over our 50 SMA on the 1 hour. So that suggests that we're going to have some selling pressure going into today's session. So yeah, we have a little bit mixed bag there, but I would be very careful pushing your longs in the opening session. Like I said, the non-farm payrolls don't look very good, in my opinion. We'll see how they come out and go from there. But yeah, I'm kind of leaning that they're going to want to take some of the gains off the table today, and there's going to be some selling pressure to the downside. Okay. I will see you later today. I'll have my recap for the morning. But as of right now, I have no idea what I'm going to trade today. So we'll see how things go.